Ladies and gentlemen, please help me welcome a very special guest and a close friend of mine, Mr. Tyler Mackechnie. All right, thanks for being here, Tyler.
Absolutely. It's great to be here.
Looks a lot different from up here, doesn't it?
A little bit. It actually it looked a little bigger from down there.
Okay.
I think next time, 5 times the size, right?
5 times the size?
Year, yeah.
I like that. Next year, FXSummit. Who's showing up to the next FXSummit next year? Incredible. Now we're doing here first, and then we'll do Vegas, then we'll do Dubai. All right, Tyler, talk to us a bit about yourself first. Give folks a brief introduction on who you are, then we'll jump right into automation.
Absolutely. So just to give some background, I've been in the marketing space for about 10 years, trading space 8. About 5 years ago, got into automated trading, and for the last 3 years, I've been developing softwares, and for 2 years, advising an entire marketplace of softwares, indicators, and automated trading products.
All right. Can you talk to us? So a lot of the folks have been hearing about automation. What is trading automation?
Yeah, I think the big thing for people to understand about trading automation is there's many different forms. You could be in Forex, crypto. There's people now dabbling into stock automation. Obviously, there's a lot of red tape around any industry and the word automation, but that's the legal side. We'll get into that a little later in compliance. But so people can understand what automated trading is, you first have to choose an industry. Many of us were talking Forex, so if we stick to Forex, we can talk MetaTrader 4, MQL4 is the trading language, and the different products that exist. You've probably seen EAs. Has anyone in this room used an EA before? Okay, good show of hands. So many people in the room are already familiar with an expert advisor. For me, I started working with expert advisors 5 years ago and then trading with them. Now I've been developing them. I have my own EA that I've been using successfully for 2 years with a track record. So the point in understanding this is you're basically just automating a strategy. As everybody in this room that's a manual trader, do you have your own trading strategy, something you stick to most of the time? Raise your hand if you have a trading strategy. Okay, there's a lot more people with a trading strategy than that have used an EA. Would you like to automate your trading strategy? Show of hands?
Yeah.
All right, well, I think let's get into that then and talk a little bit about that.
Okay, so if someone is sitting in this crowd right now that says, I have a strategy, I'm very confident, and I've started to see a little bit of success, how do I turn that into an EA, or how do I turn that into an automated system?
Oh, well, the first part is it needs to start as an indicator, right? If you haven't even developed your own indicator yet, first take that strategy and ask yourself, okay, can this be developed? If you are a naked trader, it's going to be really hard to build a strategy and automate it. You're going to have to develop your own principles and rules around what you look at when you use naked charting. But a lot of people use different tools already, or they may have some other indicators they use that help in their manual trading with their strategy. It's really about reverse engineering that first. And then, of course, I'm going to be honest with you. I'm not a coder. I'm a developer. I can take ideas, I can take strategies, I can look at the market, and I can communicate that to a programmer and build rules and principles around it. We heard Pierce talk a lot about it and talking about different rules. You need to build out the rules to your trading strategy, and TradingView does a great job at that. I know he said TradingView doesn't do automated trading, but he talked about webhooks. I know many people that have built automated strategies on TradingView as well, using the Pine language. They build a webhook and they leverage a platform. There was a few that were just mentioned as well. That you can plug in those webhooks to and actually transact on another platform and automate from TradingView too. So really you got to build those rules and principles around your strategy, and that's going to be very different because sometimes those rules are something you look at personally. How do you build that rule into something that a software can understand and look at? And that's one of the big key components first. So it starts on an indicator level. Once it's in an indicator, then you need to be able to actually go ahead and start running through that indicator. Maybe that's with a very close friend group that all works on it, and we look and go, okay, no, that entry sucks, that doesn't make any sense, that would have lost. And you can kind of back test your indicator, and then through some forward testing, decide if you need to optimize it a bit. Because Pierce made a good comment about constantly needing to optimize strategies. Things are ever changing. I'll tell you, just in the last 3 years of developing softwares, the market has changed massively. And many of you manual traders have probably seen it. A few years ago, Euro USD didn't move more than like 300 pips without a retracement. Now we have things moving thousands of pips constantly. It's 700 pips here, no retracement. And that's a totally different trending market than where we were 3 years ago. So a strategy that maybe was working 3 years ago, if you didn't further optimize it, you're now blowing your account. So you constantly need to be optimizing and also looking at the market conditions. That's why when you do have a strategy and it is working and it's working time and time again, okay, build that into the indicator. Once you get it to where it looks good automated, then you need to be constantly optimizing it. You need to be prepared for the market. A lot of people think, oh, I bought this EA, it's hands off, let it run. There's got to be a developer behind the scenes that's optimizing it. Many of the products that you can buy online for free, they work today, they're gone tomorrow. Yeah, you want to find a solid product, a reputable developer, somebody who's constantly showing new data, optimizing the product, and looking to make enhancements. And same for yourself. If you're somebody trying to build something, like I said, start in indicator form, work through it, and then we'll get into compliance and legal once you want to release it, right? We can talk about that in a bit because I think that's a big component that a lot of people in the room are missing. I see people selling EAs online, and they don't know the legalities behind some of the ways you got to do it in the US.
So we're going to talk about regulation towards the end. I also do want to go back and jump on the optimization track that you just spoke on. But for folks who are still trying to wrap their head around automating a strategy, what are the pros and cons to using an automated trading system versus manually trading?
Yeah, I would say the biggest thing is when you're manually trading, you have emotion and you have greed. You're not going to follow the same rules that a software may be programmed to. Even if that rule you programmed for yourself, the human emotion element is always going to allow greed to take over. Because something may go against you that you didn't expect to, and now you're taking a larger lot size. You're starting to stack when you shouldn't be. You're cost averaging way more aggressively than a software would have done. You start doing these things that are really going to tarnish your account, and that's the human element. And that's why I'm a big fan of software, because if you can take your own strategy and automate it, now you're not staring at the charts. You can sleep peacefully at night. You don't have to stay up for the London session. How many people would actually like to sleep for the London session? So I mean, that's a big thing, to be able to automate it and get away from the charts, because people want to have freedom. For me, I don't want to stare at the charts every day. I wake up, I look at the charts, I look at my trading accounts, I go about my day, I check them again before I go to bed. That's my routine with an automated strategy. How many people have that peace of mind and that freedom? And, so you want to be able to develop that for yourself, and that's why automated trading. Now, again, people have always had this argument, oh, manual, you're always going to be able to do more. Well, I'll be honest, if you take an EA and use it manually, you can do aggressive things just like a manual trader can and still automate it, just you need to be a little more hands-on with it. You need to know when to close it. You need to pay attention to news and volatility. I have people that use the EA I developed. I've released settings that very conservatively, I can't make any guarantees, I'm not reading a risk disclaimer right now, but I do like 5 to 8% a month, right? Pretty consistently on yearly averages. I have customers doing double that, some triple that, some way more than that, but they're hands-on. They turn it on and off. They know I don't want to run it in this session. I want to do this. They find their own way of using the product. And that's another thing for you. You can leverage an EA to still have massive success and make those aggressive manual returns, but you got to learn how to use it, just like you need to know how to use your own manual strategy and be able to deploy the proper risk and the discipline around it.
All right, that's awesome. We had a discussion about this a few days ago. How specific does someone need to be with that strategy that they have in order to be able to program it? So if a lot of folks here, they have a mental strategy, maybe they haven't put it down on paper in a way that a computer can understand it, how specific do they need to get, and how well does someone need to understand their strategy in order for them to program it?
Well, it starts very basic, right? Even when I started building my own programs, you start with a very basic thing, and you start to use it. And as you use it, you find where it fails, right? Because when you have the human touch to it, there's that element where you know to close or set your stop loss a little differently. But when you automate things, you have to really continue to tweak and find those perfect mediums. So what I tell everybody is you add a feature, you test it. You find where it fails. Okay, was it the feature that failed, or was there something else I could have added that could have adapted or controlled that situation? And that's what you do. So in my own product, for example, I scan all the Forex majors and minors. But I have a correlation filter, for example. All right, I'm looking for reversals in my program. So when I'm scanning all of them, let's say the market goes crazy trending, a lot of reversal trades could have triggered, but I don't want to be in all those trades of every major and minor. So I have a max pairs feature. I also have a correlation filter. I want to make sure that I'm not taking trades in the same direction on pairs that are highly correlated, or in opposite directions if they're negatively correlated, right? So you got to look at that stuff. Then even like a max quote and base filter to know, okay, I don't want to be in the same pairs with the same base or quote, especially in a trending market, because you want to be able to mitigate your risk and diversify it, because if you're just in correlated pairs, your risk is ultimately the same times 2 or 3, depending on how many pairs you're trading. So just like that in your software and as you're programming a strategy, you're going to continue to add things that you never thought about previously because you were manually doing it. So as you start being very specific, it starts very basic, like I said. But yes, it needs to get very specific. But in the beginning, You start basic with what you know, and a lot of times, like I said, you're gonna have to reverse engineer things. If you are a manual trader, you might just know in this time, during this time, I look for this candle, and okay, if this happens, I take the trade. Sometimes the software is not gonna be able to understand that. You're gonna have to find a different way to communicate that and make a software understand what you're trying to do. And that's the big thing that's very hard about it. And no, you don't need to be a coder or an expert to figure this out. You just need to find a good programmer. And there's a lot of really cheap ones that do MQL4. And like I said, if once you've started to get some progress, you can hire a more advanced one to clean up your code and pay a little more money as you're serious. But to start out and play, it's really cheap to just get on there, find a good MQL4 programmer, and start testing your ideas. Now, it's not going to be easy. I'll tell you, I went through like 250 versions of my software before I had a stable version that I really trusted. And then since then, we've gone through at least another 20 versions of updates, new things. I have like 10 new features I'm actually testing right now to add into my software based around the Ukraine war and some of the trending market conditions.
So you've done a lot of analytics in preparation to being in this space and just having to figure out all the ins and outs. Are there any trends that you've seen in trading or in markets that you could share with folks that might be able to give them an advantage? Trading a correlation or things that have to do with volatility or trading news. Are there any trends specifically that you've seen that you could share with the folks that might give them an advantage?
Well, I think the big thing is it depends on your trading style. So, I know a big thing that's becoming very popular right now is people are trying to build EAs that can work to pass prop firms in. I know a lot of people in here are trying to pass some prop firms and get funded, am I right? Raise your hands if you've tried to buy a challenge account. Not that many people, I'm actually surprised. So it's become a big fad now that people are really trying to pass these challenge accounts using automated softwares. But the style really depends on my advice for you. Are you trying to develop a scalper? Are you trying to develop a swing trader? Reversal strategy? What is the exact trading strategy that you use? And then based around that determines the way I would tell you to build different things into your software to basically mitigate risk, right? So it really depends on the strategy. Like I'll give you an example. Some people hate cost averaging, which I don't blame them. A lot of people are like, oh, martingale, cost averaging, grid-based strategies. I'll be honest, they're some of the most consistent ones, but they also will blow your account if you don't have proper risk management and the right trending market conditions. But grid-based are going to be the most popular for consistency. They're what most people are trying to figure out how to use on a prop firm account as well. And the truth is, though, with any grid-based strategy, even with proper risk management, if you try to run it fully automated, you're going to get into a little more higher drawdown than the 5 or 10% that some of these firms allow. It's just the nature of the strategy, even if you have proper risk management. Whereas some other people, they'll choose to run a strategy where you have a single entry. You don't cost average. It has a stop loss. It has its risk management. It wins or it loses. Those strategies can have great months because they tend to be chasing the trend more. But then there's also the months where you might take a losing month because all the trades just hit stop loss. They may not be as consistent on a monthly basis, but on a yearly basis, they tend to do the same return. So it also depends who you're trying to accommodate. Are you trying to take the product and license it to a retail trader where it needs to get monthly returns and be exciting? Or are you trying to develop something for, say, a hedge fund where you just need to make money pretty consistently on a yearly basis? It doesn't matter if it has a losing month or two in the year. It's just on an end of the year basis, it's in profit. And that's how a lot of the true big institutions and funds trade is, yeah, there's going to be losing months. That's why when I hear people like, oh, this never loses, it kind of concerns me sometimes because just like anything, there's got to be losing trades. No one wins forever. If anybody says, oh, we always win, yeah, that just don't listen to anybody.
So based on that trend, if we can follow up, to a new trader, most folks are learning a single entry strategy, right? So here's an entry price, I have my stop loss, I have my take profit, there's a risk and reward there. But what you're mentioning with these other strategies is that they dollar cost average, which means they have multiple entries and they scale in different ways and risk size it in a way to protect the account or to make the most profits. To a beginner trader, is there a benefit to one versus the other? Should they learn one versus the other, or do you think it's a preference?
I think it's pure preference, and it depends, again, on what your end goal is with the strategy. Is it just for yourself? Are you trying to license it? Are you trying to build something you can give to an institution or manage money with? It really depends on your end goal, on what the purpose of developing a strategy or software is, or using a software yourself. Show of hands in the room, is anybody looking to build a software and license it to the retail market? Okay, I see some hands of people that actually want to build something and license it out there. All right, that's great. And then show of hands, is there any money managers in the room managing any kinds of funds, PAMs, trading? Okay, there's a few people in the room. So yeah, I mean, the end goal is really in that. And then show of hands if you just want to use the software on your own and make some money. All right, so everybody is a little different. It depends on your end goal. So if I was speaking to the customers who just want to use a product, what style of risk tolerance do you have would be my real question when choosing a software, because that's going to be the biggest thing is your risk tolerance, really, when choosing any strategy. If you're one of those people that can't stand to see 10% drawdown, all right, I'm going to give you a different idea than somebody that's like, I can handle the 20, 30%, on close profit every once in a while if the market's crazy and trending, knowing that's not going to blow my account, knowing my risk management set, I can handle that risk tolerance. Or, if you're a money manager, okay, what are the end goals of your clients? What have you sold them on? What are the expectations for the money they hope to make and the risk that they expect? So you just got to really look at those kind of questions, and that's going to determine really the advice and what kind of style of automation you should be using.